did touch on it before, but just which markets do you prefer trading?
The foreign exchange market is the one that suits me best. Historically, actually, it's been the bund market, but now that I'm trading with my own money from home, I'm spread betting. The spread which gives you the best opportunity is the foreign exchange market. Saying that, if I was to take a longer term position, historically it's been the bund market or the Treasury 10-year yield 10-year Treasury market. In recent years, they haven't necessarily offered great opportunities, although in the last few weeks, those markets have suddenly, for short-term traders, provided plenty of good opportunities. So markets come and go in over periods of time. They have their own different volatility patterns.
Yeah. What mediums do you use to trade?
Well, privately now I use spread betting. That's my favoured market. Simply, it's you don't have to pay tax on profits, so that's what I use for my trading now.
That's fair enough. What's your typical time frame? I mean, you touched on it. You can't do the very fast turnaround, but do you take short-term punts on the markets at all now?
I tend to do medium-term punts now. I do the odd short-term, so a couple of S&P futures trades this year, which I've turned in a matter of a few minutes. Some of my currency trades I've run for several weeks and even a couple of months over the last few years. Typically, I would say though, trading from home, it would be hours to days. If I was to trade now as a career, I'd probably be very much short-term trading, which is what I've always done, my time frame. So anywhere from a few hours to several days, a week or two would be the longest. Now that I trade in this different approach where I've taken a step back, it's days into weeks, usually.
Do you think that different trade durations would suit different personalities? You know, are certain personalities better suited to certain type of trading? Yeah,
absolutely. A lot of the research we're doing has been around that, and we're finding that there are different types of personalities suiting different types of trading. In terms of that, we're finding that the more emotional, the more intense personality is far more suited to short-term trading. The more composed, the more deliberate, calmer personality, the more rational personality is naturally disposed to longer-term trading, more macro views. And if you switch that around in both ways, it tends to work against them. The more composed type, we find struggles with short-term trading. And we're talking about very short-term trading, and we're talking within sort of fast, volatile markets where they need to be able to try and find a reason for a move. And if you wait for a reason to reveal itself in those markets, the market's already moved.
That's interesting. I kind of imagine it would be the other way around, because you're almost trying to make people, you know, an emotional trader, you know, he might work on his emotions and trade too quickly, whereas if you force them to take some time, conversely the other way, you know, then you're potentially, that's interesting.
Well, yeah, I mean, those are challenges. I mean, every trader has challenges, and there will always be traders that buck that trend. That's what we find. There are exceptions to that. But what our work is finding is that particularly in the short-term markets, the emotional traders have the advantage. If you just think about it, the market is trading on emotions. The market's full of thousands of other people who are mostly emotional, reacting to moves very quickly. And the market gives lots of very subtle cues the whole time. Those who can very quickly pick up on those, who are the more emotional types, they have their emotional radar sort of out and open. They're able to pick up on those cues. They don't question so much, why is this move happening? But they're able to read the market, they're able to jump in, they're able to jump out. That's their domain, and that's what they're brilliant at. In the longer term, they're not so great. They get a little bit too unnerved in the longer term markets. They get impatient. It doesn't work for them. If we were to use an athletics comparison, they're sprinters. These other guys are long distance runners, and
in that analogy, that makes sense.
Yeah,
Yeah.
yeah.
Go on, and so you were adding there.
Yeah. So to build on that last point, we're finding again through our work that, which also turns on some of the beliefs that people have on its head, that we're actually finding that the more risk-averse people tend to do really well in these fast, volatile, short-term markets. It's almost like they're primed for fear, and they're so in tune with that, and they're so against uncertainty and unsteadiness and insecurity that they're primed looking out for every threat and every opportunity in those environments, and those who are able to somehow turn it are able to monetize that really well. So we're working with one particular fund where probably the most risk-averse individual we've come across last year made over $100 million for them in the FX markets. At the other end of the scale, and we find a lot more people at that very highly risk-averse end of the market working in those short-term markets. We don't find very many people who are highly risk-seeking working in those short-term markets. We do find them in some of the longer-term markets. Most people are balanced sort of halfway on the scale between risk aversion and risk-seeking personality. And it's really important again that to be successful in trading, you need to have a very strong money management and risk management bias. You need to have a high degree of prudency. So these wary people are very high when it comes to prudency and money management. And again, those in the middle of the spectrum, again, they tend to be quite focused on money and risk management. But when you get to the other end, the highly risk-seeking element, they really have a tendency to sort of put that on the back burner and not pay enough attention. So it's a real challenge for them. They'll just go out and they'll look for risk, but they won't manage their risk particularly well. So we do find some people who have managed to be successful who are really risk-seeking, but that they've had to bring some changes to their working processes and put some strictures in place.
Do you think that you can actually enforce through training? You talked about the best learning is through error, but do you think you can actually enforce through training people to change their trading style, or is it just something you're born with?
You can do. I mean, I find that a lot of the best people that we meet either had some adversity early in their training career, so they suffered some setbacks and losses, and they learnt from that, or they had really good mentors early in their career. And those mentors weren't always from trading, but they were from some sort of business or performance background that sort of gave them some insight. That's one of the, having worked with so many people that we're finding. But yes, you can enforce some sort of, you can learn. I think the biggest challenge for most people is to learn. They listen, but they don't always hear. And a lot of people get caught in the ego battles that get in the way of them actually applying their learning. People spend too much time looking for the outcome and not doing the hard and important work that matters.